Hey everyone, in this video we are going to be looking at the discussion questions, the quick study exercise, and the problem here. So this is for chapter 2, and if you check the previous video I made, I went over all of the practice with feedback problems here, the exercises as they're called on Canvas, with the exception of this first tab, but I went into pretty significant detail on the rest. I think it's a little bit of a tricky chapter, and it's worthwhile to spend some time helping you all understand. So check that video for the first section, and let's get started with this section. So here we're just again in our kind of normal Excel environment here, and we want to answer some questions. First one, just some discussion questions. First thing I'm going to do is just add a little bit of room here to this kind of initial problem set. So I was clicking the insert button, highlighting some rows, and then clicking insert adds rows there, so you got a little more room. Then we're going to go to insert, and let's insert a text box here to answer the question. Okay, so the question is, how do you think a hospital might apply job order costing? And I think the way that makes the most sense for this problem is to remember that job order costing is for customized jobs, if you will, basically, right? How do we apply the cost to a specific job? And in this instance, the hospital might see each individual patient as a unique customized job, right? You could have different costs that go into a patient's procedures and the services they're receiving, right? And it'll allocate all those costs to that patient. And I guess the way you could say that is they can and do track costs associated with each patient separately. And that does happen, right? Because you'll receive a bill with your individual charges on it. And then in addition to the specific charges related to the medication or procedures that a patient might receive, the hospital can also allocate overhead costs such as utilities or it'll just say that, such as utilities. It could be a whole host of things that are overhead costs, rent for the hospital, the cost of janitors and admin, or admin would possibly kind of go in a separate place. But and the one thing we need to differentiate here in terms of the problems, a lot of the problems we're seeing from a manufacturing perspective is, as we're allocating these costs in a manufacturing environment, that's going to be recorded as inventory. That wouldn't be the case in a hospital. They wouldn't see you as inventory, but not an inventory asset. But as they apply these costs, they could see that instead as part of the receivable that they're charging, and just the pricing that they basically charge. So these concepts can be applied to a lot of different businesses, not just manufacturers, although that's kind of the typical problems that we're kind of lens that we're usually seeing those through. So yeah, the hospital, such as utilities, etc., to the patient based on some application formula similar to the predetermined overhead rate calculation we have been using in our work problems. So something similar to that, right? This is more of a conceptual problem, and just kind of thinking through how this could apply to different types of businesses, service provision basically for a hospital, right? One thing I'm going to do that I like to just do as a preference thing for Excel is to turn the grid lines off when I'm working on a problem like this. Sometimes, they're nice to see when you're working on in a real spreadsheet type format. Do a quick quick spell checks. I spelled that wrong too. So F7 for spell check. I recommend you use that. But when you're answering these discussion type problems, I kind of like to just have a clean look at my Excel spreadsheet here. So, okay, I'm just going to copy. So I just did a Control C copy. Oh, geez. Just select the text box by clicking the edge and you can click into it, but then to actually select it as a whole item, you have to move your cursor over to where you see it kind of change to a cross with the arrows. Click it once. That would allow you to drag it around. And you can Control C to copy and then Control V to paste. All I want to do is get rid of that. I already pasted it down here. And I'm going to add a row just for a little more room. Okay. So let's take a look at problem or discussion question 2. What journal entry is recorded when a materials manager receives a materials requisition and then issues materials, both direct and indirect, for use in the factory? So, I'm going to tab over a few times. So I'm clicking tab to give me, you see how it moves over. So we'll do DR and CR for our debit and our credit. And if we're basically the materials requisition form is what we're going to use to move or how should I say this, to allocate those costs into the specific categories of manufacturing costs. And so the first entry we do is to, buy the raw materials, right? So some sort of credit to cash, debit to our raw materials inventory asset for various things, materials, raw materials and indirect materials, etc. And then the second entry we'll do, which is in this problem, if we're going to move those costs into a specific job through the job order costing system, we're going to debit an asset of work in progress, and we'll just put some X's in there to reflect that some dollar amount, right? We don't have a specific dollar amount in this one directly, but and then factory overhead or manufacturing overhead, we've seen same thing. And so a portion of, and as it talks direct and indirect for use in the factory, the work in progress or process is kind of I usually say work in progress, kind of use interchangeably there. Let me move it's kind of a little wonky doing these journal entries in a text box, but if you use the shift over and all that, I just deleted my question. Making a little more space here. You will notice when you do an insert row that it moves your whole text box down a little bit, but you can just drag it back to move it up. Okay, I'm going to click my cursor behind the last thing I typed, which was these little X's to reflect dollar amounts, and then I'm going to hit enter just to move that over. And sorry, I want debits on both of these because these are both of our inventory accounts. And we want raw materials inventory. That's a little bit excessive on the 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay. There's no set number that you have to have your journal entries. Inventory. Okay. Now I'm going to tab over and just do some more X's, like I said. Okay, so this is just kind of a representation of what a journal entry would look like for such a thing. And we can just have a little explanation here to record materials requisition. I'm doing Control Shift and over. If you hold Control Shift and click over, it allows you to select the whole word at a time. That's a quick way to select more than just if you want to do that. I'm just going to do a little italicize for the journal entry explanation. But hopefully that makes sense. We're moving costs out of the raw materials inventory asset. So we're crediting that asset to reduce it. And then we're moving a portion, the direct portion, into work in progress and the indirect portion into the manufacturing overhead account. And then remember, some point down the line at the end of the month or the end of the year, we will look at the manufacturing overhead account and record an entry to apply the over or under applied overhead, right? Because we're not going to figure in overhead using the actual costs here that we're moving over, but instead using a predetermined overhead rate. Again, I'm going to make a bunch of spaces with rows here. And then speaking of that, I'm Control C, Control V, so copy and paste just to have another text box. I'm going to select this all and delete it. This is just going to be a text explanation. And speaking of what I just mentioned, so this question is a good question, I think, and it hopefully will help you kind of like think this through. Why are we using a predetermined overhead, right? Why don't we just use what we're actually booking in to the overhead account for real dollars of overhead? And so there's a number of different reasons. I'm just going to type them in like this. So one, the timing of the payment for factory overhead is often different than the benefit derived from production. So it's really hard to specifically match up the timing of when an overhead, the payment for that specific amount is going to be applied, especially things like a factory supervisor's salary, for example, or rent or property taxes, things of that nature. It's very difficult to match that up with the timing of production. So the timing is an issue. Let's see, number two, the process of directly allocating overhead instead of using the predetermined, budgeted overhead rate method. So the process of directly over would be time consuming and cumbersome. It would take a lot of work to actually look through, your utilities bill and somehow try to match that up with the time that a certain job was being done or when a person was using specific machinery, so on and so forth. It's just, this use of the predetermined overhead rate is really kind of an efficiency, an efficient system that's kind of it's cost benefit kind of a thing when you're looking at if you actually tried to somehow allocate the overhead. It would be very difficult to directly do that. Not only because of the timing, which is one issue, but then the process of actually just doing that allocation would be time consuming and cumbersome, like we said. Third, timely. I mean, this kind of follows from these two things as well. Timely pricing of products is needed, and we can't wait until all overhead costs are billed. That's another issue, right? If we wait, we need the costs now. It's not always that we can wait or have, and that would require a communication stream, an additional communication stream to be open that would be consistently tracking invoices and from the AP system back to the costing and inventory systems. And again, that just kind of adds to the whole issue of it being time consuming and cumbersome. And we can't wait necessarily in a fast moving business environment to not price our products until that thing is, that process is done. So we come up with this rate, and hopefully we're good at our jobs. Our predetermined overhead rate is relatively accurate. And so the closer we can get to reality, the better. But it's, part of the issue of it being time consuming and cumbersome would mean that we couldn't be doing pricing in a timely manner. And that's what we need to do when we're selling products all the time, right? Okay, and let's say, lastly, the direct allocation of overhead would result in some arbitrary charges lacking accuracy. And that just kind of gets back to this whole process about it being hard to specifically match up some of this overhead to the production, especially for things, like I said, that are very high level, like a supervisor's salary, or a utility bill. It'd be extremely difficult, and if not impossible. And I think what we're saying here is really it would be impossible at sometimes to actually directly allocate some of these things. And again, we'd just be getting back to this process of somehow allocating those out based on some sort of predetermined formula. So kind of gets us back to that whole process of estimation that we're using anyway through the predetermined overhead rate. But then it runs into all these issues of the timeliness, how cumbersome it would be. If you have to hire a whole another person just to do this process, it's probably not worth it, right? That's the whole thing, is how can we do this in a way that makes sense without having to incur a lot of significant additional costs? Because when things are time consuming and cumbersome in a business environment, that means they're expensive as well. So you got to look at it from a cost benefit perspective. And that's basically, kind of what it comes down to, is the cost benefit really just lends itself to use of a method like the predetermined overhead rate. Okay, and that's good. Let's copy this one again and paste it down. Paste down here and move it down a little bit. Clean it up. Okay, the textbook used a percent of labor cost to assign factory overhead. Identify another factor or base the company might reasonably use. And we've talked about this a little bit in our lecture, and in the lecture video this is discussed. But some other factors or bases that are often used to assign overhead include machine hours, so let's see. So this one, so you use a percent of labor cost to assign factors, factory overhead. Identify another factor, another include machine hours or direct materials cost. So those are two other factors you could possibly use. We use direct labor, but you could have a process where certain machines are how many hours were used on a specific project with a different machine would be the denominator that you would use, or your base, your factor. So if you say, we use this machine over here for 10 hours for this job, and then we used it for 30 hours for this job number 2, then we would allocate a specific portion of that overhead, like we've been doing, not on dollars, but instead on the machine hours, basically, or direct materials costs. And I just thought of one excuse me. Oh, geez. Excuse me. Okay, one other commonly used base is labor hours as well, as opposed to labor cost or dollars like we were assigning. So you could look at something and say, we instead of just the specific cost like we've been using, we could say 10 hours of labor went to this project and 20 went to this other project. Based on that, we're going to allocate a specific portion of overhead. So it doesn't have to be direct labor cost dollars, but and the process for doing that allocation and determining what the rate would be is similar, of just identifying total estimated overhead rate or overhead costs divided by whatever the total estimated, machine hours or direct materials costs or labor hours, so on and so forth. So whatever's the most convenient and accurate as far as doing an estimation. And that's an iterative process that you will determine over years of working as a management accountant, right, and becoming an expert in your business, what the best factor or base would be to use for doing that allocation. If you're, maybe 1 year or in a certain period of time, month, quarter, half a year, whatever, you use a specific allocation method, and then you realize, like, we keep having large variances in our overhead rate allocation, versus real overhead costs. Maybe that's for some reason not a good. Maybe it's too erratic and not as connected to overhead. So that's really what you want to do, is try and find the factor or the base that really ties as best to the actual cost for overhead that you're going to incur. So, and that just requires experience and knowledge and some trial and error, honestly, probably. So, okay, that is our discussion questions. And next, let's move on to the quick study section. Okay, so in our quick study question here, first thing I'm going to do, again, I don't like seeing the grid lines for these quick study problems because it really kind of is not that type of problem where you've got the need for specific cells and linking things and so on and so forth. So anyway, step one, I go to view, undo grid lines, makes it a little cleaner, especially because there's some differences in these templates of using a text box versus just directly inputting to a cell. So anyway, okay, let's take a look at these quick study problems. So question number one says this company that uses a job order costing system. In the last month, the system accumulated total labor time tickets totaling $25,600 for direct labor and $4,300 for indirect labor. These costs were accumulated in factory payroll as they were paid. Prepare the entry that Penn should make to assign the factory payroll. So what we want to do in these problems, again, which we've been kind of learning throughout, is the process of moving the cost from one place to another, basically, right? And so let's go have our debit. I'll just write it out. I know we did DR and CR. Either one's fine. Debit and credit. Is that there? Yeah, okay. And we want to say, okay, we're moving these into work in process, or WIP, or goods in process. Sometimes, those are comparable terms. And for our direct labor, we know exactly how much that's going to this specific job or jobs. I put one too many zeros, 25,600. And then for the indirect portion, right, that's the overhead part, we're going to say manufacturing overhead or factory overhead. Again, these are just different terms you might see meaning the same thing. Again, this is an asset. Our overhead account at the initial accumulation phase throughout the year is going to go up with a debit. And then remember, we're going to compare that to our predetermined overhead rate, that had been applied at the end of the month or the year or the time period, whatever it is we're using, and we're going to clear that account out to cost of goods sold. Okay, and then factory payroll expense really is what we're talking about when we're doing that. And what we're doing with this credit, and I'm just going to add to both the debits, obviously. Remember, all of our debits need a credit to assign factory payroll. We'll just say that, and we'll italicize it for our explanation. And so, in essence, if you remember when we originally pay payroll, we are debiting payroll expense, and we're crediting some payable account, and then it goes to cash once the payment is made, so on and so forth. So then that's a debit to payroll expense, but we don't want this to go to period costs or to the income statement right away, right? Which it would if we just left it as an expense like that. But instead, what we want to do is we want to take those costs, move them out of expense. It's originally we debited expense. Now we're crediting it to go to zero for this portion of the factory payroll. And we're going to debit our projects that we were working on, essentially, right, to move those costs there. So expense goes down, assets for products goes up, and then it will eventually move into expense way down the line when we sell the products later on through cost of goods sold, right? Okay, let's look at number 2. So the following information is from materials requisition and time tickets for job 9-1005, completed by a jet ski company. The requisitions are identified by code numbers, starting with the letter Q, and time tickets starting with W. Okay, so we can see materials requisitions are these ones, and then, I think I just, oh no, okay. And then we've got the W's are time tickets here. So we've got these 3 time tickets, and we've got these materials requisitions. And then at the start of the year, management estimated the overhead cost would equal 110% of direct labor cost for each job. And we need to create a job cost card showing the cost of labor, materials, overhead, and the total cost for job 9-1005. And so again, this everything in this little spreadsheet, this little table, relates to job 9-1005. Okay. So there's a number of different ways that we could kind of do this, so if you want to follow here along, this is a good chance for me to just write this out for you. Also, we'll say job cost sheet, Jackson's jet skis job 9-1005. And in the book and in some of the problems, you'll see more of like a different job cost card like breakout, but really as long as we're getting the information in here correctly, it's not that big of a deal what the actual cost card looks like. The information is what's really important. Okay, so let's make a couple categories here. So I'm going to add some rows to give us some space to work in, and what we want to take here for direct materials is all the Q amounts here. So I'm just going to copy, so highlighting those and Control C. And then I'm going to right click down here to paste these in. I'm going to paste special. So I'm right clicking instead of just doing paste, instead of just Control C and Control V, because that gives you kind of that funny color, which is not a big deal. We could do that. But if we just want the data without the formatting, we can just Control and paste values. So that was right click and then kind of a special paste with a little 1, 2, 3 there. So let's do that. And then let's take our second, Control V, right click, copy, paste values. And then that looks good. I'm going to have this as our little summation off to the right. Okay, that's our direct materials cost. Now let's do direct labor cost. So I just copied. I do a lot of copying and pasting when I'm in Excel. If I've already got something kind of typed out or formatted, just save some time. And here, I'll show you a different method to not have to paste special. So let's take all of our labor amounts, and you can see it brought over the formatting from the table, but we don't want that. Let's say if we don't, then we can go here, and we want it to look like this basically. So we can do the format painter. So that'll grab that formatting, and then we can just drag it over all the cells that we want to match that formatting, and it's going to look like that. And then if we want the bottom one to have this little underline off to the side, you can see how that kind of works there. And let's do an auto sum to do a summation of all the totals there. And let's see, let's add a couple of other rows, a little more space. And so we've got all the direct labor, the materials and the direct labor. And now let's do overhead cost. And for overhead, we're going to put in, it tells us above 110% of direct labor. So we're going to go equals 110. I'll just do 110% in my formula. You could also just do 1.1 as a decimal, and we'll multiply that by 2,900, and that gives us 3,190. I'm going to go through and click the little accounting format button, and then click the decimals back twice to kind of clean it up, but give us all the commas and everything. Okay, and then I think we're good now. I'm going to go to our total summation bottom, add a little final sum, and we'll say total cost. And we will equals our materials plus our direct labor cost plus our overhead, which again was 110% of the direct labor costs. And our total cost comes out to 10,790. All right, very cool. And if you want to be fancy, we could put a little border around it. You know, I don't know if you want to do that or not, but like I said, the formatting for specific forms and things like that's not that big of a deal when you're working just on your. As long as the information is coming through correct, you could, as long as this makes sense and you've got a decent presentation, not a big deal how you kind of which rows and columns and headers and all that kind of stuff. There's no real set, dedicated template or format that it has to be in, like there is for some of the GAAP, financial statements and things. So again, we have a little more flexibility in managerial accounting. Okay, on to question number 3. And in question number 3 here, I wanted to lay out kind of the whole flow of this problem. You could kind of do this just through putting a table and showing some of the multiplication. You'll see that on the actual solutions. But I wanted to go through and actually show the T accounts because I think it's helpful to understand and see the diagram essentially of the movement of costs and things. So in this problem, it says a company allocates overhead at a rate of 150% of direct labor cost, and actual overhead rates for the current period, actual overhead cost for the period is $480,000, and direct labor cost is $310,000. So now we need to prepare the entry to close or over or under applied overhead to COGS, cost of goods sold. Okay, so I've already kind of filled out a bit of this, and we'll just look at each little piece of this. So here we've said direct labor cost is $310,000, and so before we start doing our costing, basically, or allocation of cost, I just wanted to include this entry to show you, the payroll system. Let's say the very first entry is to record that expense as a debit, right? Increasing expense, and a liabilities, wages payable goes up. This is kind of the very first entry. If this was office worker salary payroll expense, right, it would just go on the income statement as an expense. But and the fact that we're going to be these are product costs, and we're moving these into the cost of the product, we want to move this out of the expense, basically, or factory payroll. And so we're going to credit that 310. And remember your T account rules. You've got a debit initially, and then you credit it, so it basically goes to zero, right? So there's no ending balance for factory payroll expense, which is to say we've moved all those costs we're moving them into an asset, basically, right? And then, later on, this wages payable will be debited when the cash payment is made to go to zero as well. But we're not going to worry about that. For here, we're just looking at the costing part. So we're then moving with this entry here down to work in progress. And remember, this is our direct labor. And so none of this is overhead labor, right? So it tells us just direct labor. So we're moving all that by crediting it out of the expense account and moving it into work in progress. And then we've got actual overhead costs for the current period of $480,000. So this is going to be our debit to manufacturing overhead of $480,000. And there's a variety of accounts that could be related to on the credit side. We could be paying for indirect materials. We could be paying for indirect factory supervisor wages. It could be payments in cash or accounts, liabilities or cash payments for indirect materials or property taxes, or it could even be accumulated depreciation could be our credit, so on and so forth. So I had these slashes here. This is just a whole list of different accounts that it could be for the credit side. We don't care too much about that. I mean, remember your accounting rules. It's somewhat important to know. But what we're really want to focus on here is the overhead piece. And so as we record these transactions, we're debiting our manufacturing overhead account. And then the final piece that we want to look at is the fact that we are actually applying into WIP here. We are applying a manufacturing overhead, and how we're doing that is doing 150% of the direct labor costs. So we take the $310,000 of direct labor costs, which is the actual direct labor cost that we know, and we're going to multiply that by 150%. So you can see the formula here. And that gives us the 465,000, and with a credit to overhead and a debit to work in process. So we've moved the cost, or we've allocated a specific portion of cost using the predetermined overhead rate of 465,000 to WIP. So I'm just gonna highlight, because I already did these little summations. So I'm just gonna highlight those, Control C, and then I'm just gonna go through and Control V everything, just because I want to put totals in here. Okay. And I think this will help us solve the problem. And so now we can see, we've got $775,000 into our work in process, but the portion of overhead is based on this predetermined overhead rate. And so looking up on here, we can see, let's take a quick, slow down just a quick second here. Let me add a row too. So I'm going to highlight this row and I want to add one more. So I'm Control C, or do I need to? Or is that good? I guess that's good. Sorry. I thought I needed to add one more, but I think we're okay. Let me undo that. Okay. So, here we can see, oh, I know why I thought that. Yeah, let me redo that. Sorry. It's kind of helpful sometimes to have an extra little space. I want to show you just real specifically for overhead here, because this is our totals now, right? And what we can see is, remember, you take your whatever side is larger minus the smaller. So 480 is smaller than 425, or sorry, 465. And so we have a debit balance in manufacturing overhead, which basically means, right, so we when we're charging the customer, we were basing it on 150%, it's that 465,000. But in reality, the actual cost that we paid here, so this is payments essentially, and into overhead was 480,000. So we estimated our costs a little bit too low, unfortunately, and so we might need to bump that rate up in the future. And what we need to do then to clear this out at the end of the period, this $15,000 little residual amount, is we need to credit manufacturing overhead here for 15,000, and then that basically just takes us to zero in overhead, which is what we want. Funny there. Okay, and then let me highlight. So this is so what we're doing here, and maybe I should do it like this. Sorry, I shouldn't put that there. I should put this here. So we're going to take 15,000 to add to our credit side, right? And now you can see, and honestly, this needs a lot of summations here just to be able to show this. Bear with me. Yeah, and when you're doing this problem, you don't necessarily need to put all this in, and do all the T accounts and everything. But if you want to, that's okay. That'd be fine. Because really, what this question is just asking is to prepare a journal entry. But this is helpful, I think, just to see the flow of everything. So now, see, this is the credit. This is the journal entry, basically, right here. I'll highlight. So the credit will be to our manufacturing overhead. And then our debit here, it's always going to be the cost of goods sold. And you can see now that 480 equals 480. And if we could mark those as zeros, but just showing, the debit's equal to credits. There's basically nothing left in this account. That's also like zero, right? If it's the same balance on both sides, we've effectively taken this account to zero. Maybe I'll just do that for you guys to see, because we've got 480 on the debit side, 480. So, and additions and decreases takes us to zero, and we've moved that $15,000 little last piece to our cost of goods sold. And then if we want to do our journal entry here, let's put I'll make a debit and credit. And these problems are tricky. They make you think. You kind of got to go through it slow. So don't rush yourself on those. And that's why I wanted to make this. Why is that? Oh, it's wrapping the text. So I don't want that. Okay. Take the text wrapping off, then it allows you to move it over there a little bit. Okay, so we debited cost of goods sold, and we are crediting manufacturing overhead. for 15,000 each. And let's say for our explanation to record year end closing of MOH balance. It's doing a funky thing because it has wrapping text on, so it's trying to wrap it all into one spot. Let's take that off, and then it allows it to just flow over into the next cells. And italicize. And yeah, that's the journal entry you want to get to through this whole process of understanding the flow of the cost, basically. So one more time, just real quick, just to make sense of everything. Remember, we had actual payments to start a factory payroll expense. Then we moved those payments by crediting the payroll expense account that goes to zero. Credits and debits are equal, so it's zero. And then we moved this into WIP, so the direct labor costs. Our actual overhead that we've incurred was $480,000, into the debit side, and a bunch of different credits could be doing, payments for factory supervisor expenses, machinery depreciation could be a credit, cash payments, accounts payable for indirect materials, etc. So that could be this is a whole accumulation of different entries, right? We're just not showing that here in this problem, a whole bunch of different things. This is that 480,000 is made up of. But over time, as we accumulate those costs into overhead, it totals up to the 480. So this is our actual expenses. We're using a budgeted, predetermined overhead rate allocation method of 150% of the 310. So we've applied 465,000. And to do that, we debit our WIP and credit our overhead. And the 480 minus the 465 leaves us a credit balance in overhead of 15,000. Of 50,000 basically. And so we need to get rid of that 15,000. We need to balance that overhead. So we're going to credit to add that to the 465 to get 480. And now your debits equal your credits, and you've effectively zeroed out that overhead account. And the debit side of the credit there is to cost of goods sold. So that now our overhead account is closed out with our entry. And we have under-applied, and I'll just put this here, we under-applied the overhead, which is in essence us saying that we didn't charge enough overhead to our projects, basically, because our actual cost came in higher than what our estimates were, right? So we may have undercharged the client, essentially. So not the best outcome necessarily. And going forward, we might look and say, okay, 150% direct labor is not enough because it's not getting us the totals that we need. You probably would rather be a little bit on the other side where you're over applied, because then you're able to pass those costs on to the customer and recoup your costs for the overhead better, as long as you're still, competitive in the marketplace. So a little bit of a process. Hopefully that makes sense, and we'll have lots of practice with this. And if you have any further questions, even after watching me kind of work through it, obviously feel free to reach out and we can talk about it in class as well. All right. Thanks, everyone. And let's move on to. All right. In this section, we're going to look at the exercise problem. First couple of few things. Again, I don't like the grid lines when I'm doing these types of problems, so I'm going to take those off my version. You can leave them if you like them on yours, but I just like to see a clean sheet more so when I'm not doing heavy spreadsheet work necessarily. This one is a little more on the preparation of journal entries and stuff like that, but I'm still going to leave it without the grid lines. There's just a lot of information here, and sometimes just formatting, moving this stuff over, maybe it's just me with my peculiar brain, but I like to just do a little cleanup in terms of cleanliness of the presentation. Sometimes it helps me think when I'm trying to work through these problems. So if you're like me, maybe that helps too. But anyway, okay. So super cool question. All right, I did not create these problems, by the way. So if you think anything is goofy in here, I'm not saying it is, but it wasn't me. I think it's kind of super cool too. It just is a little tricky. So depending on your definition of super cool, that may or may not apply. But regardless of your feeling about the problem, you can definitely look for something similar on the exam. So this is a great problem for studying for the exam, basically. A real important, comprehensive problem for what we're pulling out of chapter 2. Okay, so without further ado, let's get into the problem. So we can see we've got this company and we're using job order costing. On April 1st, there's a $4,200 balance in the work in process account. And we've got 2 jobs that consists of: job number 534 with a certain beginning balance and 535 with a certain beginning balance. And during April, we've got a summary of material requisition slips and labor time sheets that give us the following information. So this is all the stuff that's happening during the month. We have a beginning balance. This is the amounts that we're adding into the costs. And we're going to be doing journal entries and creating the little job cost sheets and T accounts, etc. Okay, so this is our data. This is our beginning balances up here. And then this is some important information here, that we know that there's an application of overhead at 80% of direct labor costs. And we also know that job 535, so this one here, and it had a, where is it? $1,700 beginning balance. That was completed during the month, and moved into finished goods. All right, so prepared journal entries. That's supposed to be a T2 record. The requisition slips, one combined entry, time sheets, overhead assigned, and then the completion of the job. So we'll do journal entries, we'll create some T accounts, and then we'll create the job cost sheets that reconcile in total with the work in process T account. And it gives us a little hint here that the cost of the work in progress for job 534 is $8,800 at the end of the month. So when we finish our whole work here, we can check back against that to see that we did it right. So that is important. Okay, so let's go down here. I'm just gonna type in A. This is corresponding to our first section. And what we want to do with this part of the problem is we want to create a bunch of journal entries, essentially. And so I'm going to do debit and credit, and let's go ahead and say account / explanation. Let's do that. Basically what I'm doing here is I'm going to create a bit of a general journal, essentially, if you will. And so how do we want to do this? Okay, I'm going to move a little. So I'm going to merge and center these. And then I'm going to take my format painter and I'm going to highlight these 2 kind of rows and columns here. And then I'm going to actually get rid of these and move these over. So this is debit and credit. Again, this doesn't really have anything specific to do with the problem yet, but we are just, we need to do some work here to create a space for us to put journal entries in. So now, excuse me, you can see that we've got a place to put in explanations and accounts, etc., which ended right here. So let's go ahead and just format paint with these rows. And you can kind of see as we do the format painter down, it then gives us a large space. Another way to do that would just be to highlight, even just one row, and then you can see your clicker go with that black cross there. And then you've got a little, on the fly kind of general journal. Okay, so a nice little spot to put our entries in. All right, so let's start by looking at, sorry, let me respond to a text real quick. Okay, so journal entries, that's what we want to do. We want to record the requisition slips, and we're just doing one combined entry for all the jobs, so we're not going to do individual journal entries per job necessarily, right? So what we want to look at here is the requisition slips for this amount here. So our indirect cost of 900, and then our direct materials here, whatever this total, 10,200. You can see the sum just from me selecting cells. If you didn't, that's one that you always can get an average count and sum by just highlighting over a number of numbers. Okay, so the first entry then, we are going to be debiting our WIP account for, like I just said, we'll do equals the sum of all the direct materials, so 10,200. Okay, and then the other portion is going to be our indirect materials, which again is, remember, is manufacturing overhead. And our credit is going to be raw materials inventory. Again, to make a nice journal entry, let's indent that to reflect that it's a credit. Excuse me, which in essence is saying we're reducing that, our assets there that we have in raw materials. And we'll say to assign materials. And let's just italicize that to show it's an explanation. And okay, that's our journal entry to put the cost of materials used into work in process, and then a portion into the manufacturing overhead. Okay, now let's do the basically. So I just copied and pasted this down because this journal entry is going to be real similar. And again, let's go to auto sum. It'll start trying to add what's above it, but let's go down. We want to select the right stuff. We don't want the indirect, so we just want the direct stuff, the direct labor. So we'll highlight those three columns. 12,600 is our summation formula there. And then the indirect labor, 1,500. We'll pick that, and then our formula we just made down here, since we just copied and pasted this journal entry, just auto updates because it's already set. And we don't want to say assign materials, we want to say to assign labor. Alrighty, cool. Now we want to, so we've got our direct materials, direct labor, and we've done some entries into overhead. But what we want to do in this next journal entry, and I'm just going to copy the bottom two, because this, just as a heads up, this will have only 2 lines, not 3, like we've got these journal entries. And I'm going to just delete the formulas because it's a little different for this one. So we are allocating into, we're not going into material overhead will be being the credit in this instance, and instead WIP again is going to be what we've put into through the predetermined allocation rate that we said, 80% of direct labor costs, right? So we're going to go equals 80% or 0.8. Sometimes I like to just write it out because it makes me real comfortable that I did it right. Put my decimal. If I don't even use a decimal, so I'm going to do 80% times our direct labor, which was here. Oh, I see one little mistake I made too, so I'll fix that here in a sec. But 10,080, and we need to fix this. I accidentally forgot to update this part. It said raw materials inventory, but really that should be factory labor or factory labor expense, and that's the materials piece. This is the labor piece. And then here in WIP, we put into WIP the predetermined rate, and we're going to credit our overhead account for that amount. And let's see. Okay, so we put all that together. Our last journal entry is to record the completion of job 535. And in this one, we here's what I'm going to do. Okay, let's just put this in, and we're going to do the debit and credit. We're going to do the accounts, but we're going to wait a minute to actually get the, this will be finished goods, and this will be WIP, right? So if you want to do FG and W, WIP, that's fine. And this explanation will be to complete job 535. Oh, sorry, I need to update this as well. Let's say to assign overhead. Okay, but I'm going to leave the debits and credits for this journal entry blank until we finish part C, which is the creation of the job sheets, because we kind of need, it's much easier to do this entry when we can actually see what the specific ending costs are for all the jobs, etc., which we will get from that. So TBD, let's just highlight these. I'm just going to put a yellow highlight there to indicate that we will be back. Okay, so that's most of problem part A. So let's get into part B. So part B asks us to create a T account and post the entries to work in process. I'm going to do it right here just because these two columns are relatively the same. They're the same size, so just for the sake of making it a little cleaner, I'm going to merge and center. MOH. So this is we want WIP. And really, like we looked at previously on the quick study, we could have work in process, manufacturing overhead. This problem doesn't ask us to close out manufacturing overhead with journal entries or anything. So if we were going to do that full cycle process like we did previously, I would make a manufacturing overhead account just to see what side it ends up being over or under applied. But we're just looking at WIP. And so let's post our entries. We're just doing, or we're only looking at WIP, right? So remember, there's debits and credits that are happening all throughout, but we're just looking at the WIP account. Let me make these all accounting format. Okay, so we've got, let me start up here. So our beginning balance tells us we have $4,200. We don't want to, let's not forget that. Beginning opening balance, and then we've got a 10,200, and I'll just link it here. Let's go with that. Let's go with that, and let's go 10,080. And then you can see we're going to have a credit here, WIP credit, but we don't yet exactly know what that is again. So I'm going to put a summation here because we have one final entry again that's we're not going to be able to see. I'll put a highlight there because that's kind of related to this. That's credit to WIP was what was going to show up down here. And yeah, okay, I'm going to add a couple other little summation spots there. Okay, now we got a good T account, but we're going to let that sit until we finish our job cost sheets, basically, because we again, it's hard to do this without knowing the actual amounts for the per job if we're trying to just say what was the cost for one of these jobs to be moved over. Okay, so we don't need anything fancy. Again, remember, we're just doing this kind of in our spreadsheet here. So job cost sheet, let's say this is job 534. Let's have a beginning balance. Let's have, sorry, I don't know what I put there. Materials, labor, and overhead. And we can put a little 80% of labor just as a kind of a reminder. Let's see what we want to do. Let's just put make this a little bit clean. Okay, and then we've got a total. I just kind of put that in there. Let's, just for the heck of, this is a spot where having some of that formatting I think makes a little bit of sense. I'm just gonna merge and center these. Again, some of this is not like a requirement or anything, but good Excel hygiene, if you will, just making things look clean and balanced, in terms of their presentation. Honestly, to me, helps me when I work in spreadsheets like this. Okay, so now I've got kind of a nice looking little easy job cost sheet here. And then we can just take that, copy it, because we have a few different items, right? We have 534, 535, but same, components, and 536. So let me update the name. I'm going to delete this row just to kind of clean that up. So, okay, so now we've got these 3 job cost sheets. And we can now put our numbers in, start filling these out. So our beginning balance here, I don't know if we can actually link to it. Shoot, it's in the words here. So can't link it specifically, but 2 jobs had a starting balance. 534 was 2,500. So 2,500. Oh, and while we're at it, let's just do the formatting of all these into the accounting style formatting, and let's might just do this again. Maybe this is over the top, but I like to have a good clean. Like I said, when I like how my spreadsheets and forms are looking, it makes me feel good. So I'm going to auto sum, and then we've got formatting and an auto sum in there. And so then I'm just going to copy down this to the forms below. Again, this is just Excel stuff. Okay, so now we've got some nice looking little job cost sheets we created, and we've got formulas and formatting is done, and we can just go ahead and put all the numbers in. Okay, so 2,500 was the 534 beginning balance. Job number 535 was 1,700. 535, okay, 1,700. And if you just as a check or just to show, remember this is the 2,500. So that's, let me just say this plus, so our 2 beginning balances are really, let me do them up here. Our two beginning balances was 4,200, which you can check, that agrees to our beginning balance that it showed for us in WIP. $4,200 balance in the work in process on April 1st. So I just do that to kind of show you, keep the logic here as we go through this about how everything's sort of tying out with balances and stuff. Okay, so that's our beginning balance. Now we need to take a look and see how we've kind of put these costs in, right? And so here's the information that we need to put costs. So we've got job 5. Let's look at job 534 first. So 534, I'm going to say equals, our requisition slip for materials was 3,200. And then our time card showed also 3,200. Okay. So let's see here. Wait, was that 534 or 530? Oh, sorry. I was picking up 535. My bad. 534, first one. 2,700 and 2,000. So that's direct materials, direct labor. And then our overhead cost, again, equals 80%. We could have put this formula in too ahead of time, which we can just copy and paste it down. But that's going to equal 80%. No, I don't want it to say that. Forgot to say times direct labor. So just the cell right above it. So 1,600. And once we have a formula, that's what we were going to have the same thing in each form. Let's just paste that in. So again, it will automatically update and take 80% of whatever we end up putting into that column. So now let's look at job cost 535. So that was the materials. This here is the labor. And then, yeah, boom, we got auto input for the overhead. So that's cool. And we had 0 beginning balance. This is a new job that we started during the month. But for 536, you can see we've got 4,300. And we've got 7,400 for labor. And boom, auto formula just gives us our overhead right away. So pretty cool. Okay, so now we need to take a look and kind of think about these. And this is what we can use to finish the rest of the problems above. So we have 535, 534, and 536. And this told us that 535 was completed during the month. And that's what we're doing here, putting job 535 to finished goods. So we can, I'm just going to put a little identifier. So this is WIP, this is WIP. So those are both still in work in process inventory. And this is going to go to our finished goods inventory. Or did it tell us it was sold? Completed during the month. No, I think it's just in finished goods. It hasn't been sold yet. So, okay. So we have what we need now. And so the final step here, let's go back to our general journal. Now we want to take, let's do, what do we want to do? I want to do this. So the first thing we are going to do now, okay, let me just back up real quick and show you all something here. So we are assigning these costs. And so remember that the cost for this 10,660 is included in these numbers here, basically, right? So if we take, let's again, just like I did with the beginning balances, let's sum up all the ending balances now. And we have 37,080. And if we add up what we can see in our journal entries that we did, and that's that's this, and this, that equals 37,080. So you hopefully you can see how this all ties together, right? And this 10,660 is sitting in this balance. So it's a part of this. And the way that we can find what part it is by basically like drilling down on this account, and then this opens up to the detail, right? So we're kind of preparing as we go, but all these systems are connected, essentially, is the idea I want to get across. So this 10,660, which we just proved is a part of the 37,080, which includes these 3 jobs, right? This WIP account has 3 jobs inside of it, all in work in progress. We want to move 10,660 out because we finished that job. So I'm just going to link to that. Credit, boom. And now we can say, let's just do it like this. So here we're going to do a little sum of the debits and credits, and we want to take our bigger minus our smaller, and we end up with 26,420 in our WIP account as an ending balance after moving out the 10,660. And there's one little check too, right? 8,800 for 534. There's a little check. Okay, we got that part right too. But I think it's really important to prove to yourself or be able to see that the total ending, that it all ties together. These are all pieces of the same puzzle here, basically, right? Okay, and then we're moving the 10,660. We credit this out of WIP so we can show that there. So the ending balance now, after moving this out, I'll show you just one more time. Just these 534 and 536 jobs. And that total agrees here to the ending after we take out the 10,660s, which is what we're doing with the credit. And then we can show that in full journal entry, format by doing our credit to the 10,660, which this is that basically, right? We don't see the finished goods T account. We just are only showing the WIP, but the finished goods then gets the 10,660, goes up by 10,660, WIP goes down by 10,660. And yeah, that's pretty much it. Okay, so that basically gets us to the end. And then the only other things that you could really, look at if we wanted to close out, which this problem doesn't ask us to do necessarily, but if we wanted to close out our manufacturing overhead, then we would need to know, let's see, what would we need to know? I think we have enough probably to go through. There might be some other overhead costs we'd have to account for, so it doesn't specifically tell us, but we could compare what we actually put into overhead, versus the amounts here. So I think there's some extra costs basically that we'd have to take a look at and see. So this problem doesn't specifically ask us for it, but just keep in mind that is something that we will do in the future, basically. So, okay, I think that gets us basically to the end of the problem. And we've assigned our raw materials into WIP, portion, overhead. We've assigned some of the labor with a portion to overhead. And that just tells us, right, that's the indirect piece. And then the WIP assigning 80% of the direct costs. And so, if we were going to close out the manufacturing overhead, we would need to know some additional indirect materials, rent, depreciation expense, all those kind of things that would be in manufacturing overhead. So we're missing some information, but this is the ABC part down here. Hopefully that all made sense. And I think it's important to kind of track this through and prove to yourself how these pieces from the job cost sheets tie back into the ledger for work in progress, and how that all ties back into the general journal. So the debits and credits are all still applicable. But basically, like, drilling down on this would get you to here so you can see the detail. So, all right, hopefully this was helpful, and let's work on the next. Okay, we're on to the last tab in our full set of the discussion questions and all the rest of the homework here. Again, take the grid lines off. Could just be me. You don't have to do that if you don't want to, but helps me just clean this up a little bit because there's already a lot of words. And I know this can get tricky with word problems. So clean as possible. Help your brain function. At least helps mine. Okay, so our manager here estimated our total direct labor cost, assuming 100 persons working an average of 2,000 hours each year at an average wage of $18 per hour. The manager also estimated the following overhead costs for the year. So we've got indirect labor, and so again, this was direct labor, 100 persons, $18 an hour, 2,000 hours each. So 200,000 hours at 18 times 18, basically, which we'll go through all the math here. I'm doing everything else in a bit. But like I mentioned in the last problem, this is the kind of information that we would actually need. We need the utilities, the insurance, the depreciation. This is everything that goes in, indirect labor, so supervisor type costs, salary, or his supervisors, just other indirect labor, janitors maybe, and things like that. We've got rent, utilities, everything just on the factory, right? Any of this stuff that's the office or sales or anything related, that would just go to the income statement. Again, remember, that's our period cost. But this is all related to product production. And so it's product costs that we need to allocate to specific products. Okay, so we've got a bunch of information here for overhead. And this is estimated overhead. Okay, so this is our total annual estimated overhead, other overhead costs, or just total overhead costs, I should say. And let's see, we've got an estimate for total average actual direct labor up here. Okay, at the end of the year, records show the company incurred $1,221 of actual overhead costs, right? So I'm just going to put that in here just for the heck of it. For illustration purposes. So this is our estimate. This is our actual. So we incurred less than we thought we would, right? So that's kind of the first thing. So just keep that in mind. The company completed and sold 5 jobs with the following direct labor costs. We had 708, 660, 350, 840, and 368,000 in direct labor on each one of these jobs. In addition, job 630 is in process at the end of the year and has been charged $25,000 for direct labor. No jobs are in process at the beginning of the year, and the company's predetermined overhead rate is based on direct labor cost. So again, just to highlight a couple things, this is actual overhead costs. This was estimated, so we had less actual than we estimated. And then just as a side note here, we're saying predetermined overhead rate is based on direct labor hours. So we are going to look here, and I think we have to do some of this below, but I'm just real quick, we could recreate that if we need to do it again. We have an estimated, so 100 persons times 2,000 hours times $18 per hour. So taking these figures, we had an estimated labor, I should say estimated direct labor, okay? And again, that was our estimate of 100 people, 2,000 hours, $18 per hour. Add that all up, or multiply it out, that's 3.6 million. And so if we're gonna create a formula for allocation of overhead on direct labor cost, we're gonna take our estimated overhead divided by our estimated labor, and that's going to give us 42%. And we're going to say, in other words, that means that for every dollar of direct labor, we're going to estimate, through our predetermined overhead rate, we're going to apply 42 cents rate of overhead. Predetermined overhead rate. Spelled that wrong. F7 and fixed. Okay, so I think we're going to have to redo some of this probably down here, but I just, reading through this, this is helpful for me at least, and hopefully maybe for you to start thinking about some of these things, just to sort of orient yourself to the problem, and then we'll do some more of the work below. Okay, so let's get started. So number 1, let's go ahead and make ourselves an answer area. Let's give ourselves a 1. Okay. So the first question in number 1 says, determine the following: calculation of estimated total labor that was expected in the year. Okay, and we did that above. I'm just going to link to this, and I'll say, I'll even link to that. Nope. Oh wait, sorry. I meant to link to the deal there. Okay. So again, we already did the calculation above. And you know what? Let's call this one A. Okay. And then let's call this one B. And what's our maybe I should have just waited to do this down here, because we basically did all of question 1 above, but I just like doing it up here because the information was right there. But we can just link to those answers to our work above. Predetermined overhead rate for the year will be 42%. Again, I'm just going to link to my answer for my title there. Oh, that's kind of funny. See how that one's slightly more indented? The formatting is a little different. So I'll just do the format painter to make those line up better. Okay. And again, how we did that was we took our total estimated overhead cost divided by our total estimated direct labor, right? And that got us the 42%. Okay. And what do we got? 1C. So I'm just double clicking in there too, by the way, and you can move your cursor back and forth and change the B to a C, etc. Okay, so this asks us overhead cost applied to each of the 6 jobs during the year. Okay, so now we got to do a little bit of extra work, right, that we didn't do above. So let's create a little table here to track this information. I'm just going to go over to give us a little space, create a little table. Okay, let's call this job number, direct labor, and then we'll just put the rate in there and we'll say applied. And so the jobs it tells us above, there was 625, 626, 627, 628, and 629. One way you can kind of do this if they are all sequential is just to drag that down. I'm going to align those to the left side just to make this clean. Okay, I'm going to align these to the right side because the numbers when we show in the accounting format will be there. And it asks us for the overhead cost applied. Let's do it. We're going to have a summation, a total. It's kind of clear that's the total since we put the total sign, but that's okay. And just because I like certain formatting. Okay, that looks good to me. So we need to know what the direct labor was for each of these jobs. So I think it tells us just up here, 708,000, 660,000, 350,000, 840,000, and 368,000. And did I have all those in there? Oh, I'm sorry, I'm missing one. I'm going to copy this and then click right below it, insert copy rows. That keeps our formatting a little better. And only 25,000 in the last job. And yeah. Okay, I think that was all of our, you know what I'm going to do too, just as a good accountant. I'm going to go ahead and just put a total over here and sum these up because we don't necessarily need that, I don't think, for anything in the problem, but just not having summations kind of makes things a little wonky, and you can check yourself. And I think as I'm checking myself right now, I see that I messed up. So if you know what the total should be, you know, having totals is a good thing. Okay, I'm gonna just black that out because there's no total. The rate is the same for the allocation rate is just the same. Okay, I'm going to show you an Excel trick here. So we're going to equals the 42%. Let's just do it off this one. And then I'm going to click F4. And can you see how there's 2 dollar signs just appeared? What that does is it locks the rate, locks the cell that you're referring to. And so when you drag down, it's going to continue to reflect that same cell regardless of dragging down. And then just if you didn't have the dollar signs there, and you get those with pushing F4, or you can just manually put them in. As you drag your formula down, it would continue to drag down. You know what I mean? The cells drag down as well, and there's nothing in those cells, so you're kind of that's pointless. So put the dollar signs in. You can do that. F4 really quick does it, and then drag it down, and it's going to keep referencing that same cell. Okay, and that's what we want. We want the same cell referenced in each one, because we're using it's the direct labor times the rate. And then we can just drag that down, do our auto sum, and we get 1,239,420. So cool. Okay. And just because I like to have a little bit of nice formatting there. Okay, so that's our totals. All right, let's move on to the next problem. Okay, so 1D now. Wait, that was 1C. Tells us, okay, we need to figure out our under or over applied overhead. So let's just put this in here. So we said our total applied was this, 1,239,420. Our actual overhead, I think where did it tell us that? Above, oh yeah, right here, right? So it told us that our actual overhead cost was 1,221,021. Yeah, actual overhead costs. I think we can just give me a link back to that. Yep. So applied, I'll say applied overhead, and I'll just say actual overhead. And the difference here, so is our applied higher? It is. So we were over applied then. And let's see, we want to take just the difference between those. So basically what we're saying is we thought that our total overhead costs were going to be this based on this allocation rate, and the base of direct labor, etc. But in reality, we only actually paid this much. And so we were over applied 18,000. What's kind of interesting, this isn't asked for in the problem, but we can look at what's the percentage off, right? So if we had a 1.5 basically percent difference between the two. So I'd say that's pretty good. If we were able to get that close with our overhead application rate, this is probably a good rate to keep using. We're a little bit over, and so if we're able to pass that cost on to the customer, we just are going to earn a little bit of extra profit, as long as we're staying competitive, right? Those are concerns to keep in mind. If we're in a super competitive environment, maybe this is holding us back because we can't increase our costs or something. But 1.5% is so close that I would say that's a really good, accurate budgeting effort, and a good job by us managerial accountants here. Okay, and just alternatively, let's just kind of for the fun of it, let's assume that we applied the same overhead, but in reality, let's just say this was $2 million, just for the sake of discussion, right? So if our actual overhead was $2 million and our applied overhead was 1.2 million, then we're off by 38%. That's a problem. And it's even more of a problem because we're not over applied now. We are under applied. And so we may have significantly passed too few costs to the customer to account for the overhead that we actually ended up paying at the end of the year. And we didn't charge enough. Our profits are going to be too low, possibly, and we're going to hurt in our business because we can't go back to those customers and say, "Oh, sorry, we undercharged you. Can you pay us some more money so that we don't go out of business?" Right? You know what I mean? So this is a good number. This is a bad number. You wouldn't want that. And if your managerial accountants are showing you that kind of thing, something's wrong with the process. So you got to really fix that. So, okay. Again, that's not part of the problem, but I think that's a great spot to kind of do a comparison of what's a good about that. And again, we talked about this earlier in the discussion question. Why we do this? It's for the sake of cost benefit, efficiency, timeliness, etc. And if we can get this close, we're doing great, especially when we're on the right side. We're collecting a little bit more profit. It gives us a little bit of a buffer. So if we had to reduce costs, maybe we could. This is so close, you don't have a lot of wiggle room there in terms. But if you were, say just for the sake of discussion again, let's just think of one more situation. Let's say this is again our actual overhead. Let's say our applied overhead. Let's say our actual was just 1 million or something. That's, then we're significantly passing along too much cost to our customers, if you want to think of it that way, which is fine. That just goes into our pricing, basically, where we're collecting more, we're more efficient than we thought we were, in other words, and we've come in under budget in our costs. And this gives us room to reduce our prices if we need to stay competitive, right? Because we are over applied our overhead by 240 grand, right? And so if we're looking at that, we could say, okay, we could reduce our prices by this much and possibly, still be making a profit. Essentially, you need some more information beyond this, but if you're in this position where you're significantly over applying overhead, maybe there's something wrong with your application rate, because you want to be accurate, but this would give you wiggle room to say, okay, we need to fix our process here, but we also have some room to do that because we've been able to pass along those costs and still sell products and all that kind of stuff. But you need some additional information to make those assessments. But here, like we said, that's a good result. Very close to actual, right? Only 1.5% difference from actual. Okay, what do we need to do? I think we're almost done. Okay, number 2. So let's just copy our indicator here. And, you know what? Let's do it like this. I'm going to go to my formula bar and just get rid of the 1A and change that to 2 so we keep our parentheses. And we say, okay, assuming that any under or under applied overhead is not material, prepare the adjusting entry to allocate any over or under applied cost of goods sold. COGS has an 18,420 credit balance at the end of the year. And so, yeah, that kind of shows us there. And there is the concept of materiality, right? And that is kind of coming into play too. And since it's technically immaterial, that's what allows us to post it through the cost of goods sold. And if it was material, we might need to make some kind of adjustment, at least from a GAAP perspective. But in this instance, we want to do our journal entry here. So just to do this, I'm going to copy this, paste this in. I'm going to say, and I'm going to do this. I'm going to say merge. Oh, wait, that's not going to work. Sorry, undo. I'm going to merge these two. I'm going to drag those down. And then I'm going to make my cells again. And basically what I'm doing, I want to just format this to be the same color. Oh, that didn't work. We want that to still be merged. Let's format that. And we'll say account / explanation and debit credit. Let's just make ourselves a little journal looking thingy. And we want to post our journal entry here to clear out this one, right? This was all just extra stuff we did just for educational purposes, but we have over applied our overhead, and so we're not going to we want to decrease our cost of goods sold, in other words. So COGS, let's not make it that far indented, is going to be decreased. So remember, cost of goods sold is an expense, so a debit increases an expense. But in this instance, since we over applied, we're going to reduce our cost of goods sold. And then we're going to debit, and let's fix that, the manufacturing overhead account to clear out that difference between the two, right? Basically, we'd be saying we've got on the debit side of overhead for all the actual payments and real charges and expenses, we have debited the manufacturing overhead account for $1,221. Maybe I should show that to you in a T account. Let's just do that. It's going to look funny. Oh, okay, I'll do it down just a little bit below. I won't put all the accounts like we did earlier to look at for the cost flows and everything or whatever, but let's just look at manufacturing overhead. Oh, why does that look so funny? Oh, because they're not the exact same width. But That's fine. Okay. So what I'm saying is, we had actual overhead of this, so we debited our overhead account there, and let's do one other thing. I'm gonna go like this. COGS. Delete that out. But okay, so this was our actual overhead cost that we incurred, and then our applied overhead that we credited was this amount. And so if you take the difference between those two, let's see what that is, right? We end up with more credits. It's on the credit side. And so to balance this out and close out our manufacturing overhead costs at the end of the year, we need to debit our manufacturing overhead. I'll just do it on a separate line just to show. And then you can see basically, and I'm just doing these just to make it a little prettier from a T account. So now you ended up with that balance. So then you debit, here's your debit, and then here's your credit, right? So those are the same. This is this, and the same as this, right? So I'll just do this for us to be able to see 18,420. That's that. And this credit to cost of goods sold is the credit to cost of goods sold there. And we don't need the totals or anything. And there's a bunch of other activity in cost of goods sold already. This is just the effect of this last journal entry. And we can say to record, to close manufacturing overhead at year, and let's just say that. Let's put that on like that, to the left side, aligned, italicized, and yeah. And now manufacturing overhead is 0. Right? It had a credit balance because you over applied your overhead, your actual overhead, this payments and depreciation expense, all that stuff was this. Your estimate was higher, so we ended up with a credit balance, and so then we book a debit to close manufacturing overhead to 0, and we record the other side to cost of goods sold. Since we over applied, it would be this way. If we under applied, the cost of goods sold would increase because we'd have to be booking credit to balance out. So, all right, I think that's the last part of that problem. So hopefully that was helpful. These problems are a little tricky, I think, and so I'm glad to have the ability to walk you through. Hopefully this is helpful. And we'll talk about all this stuff in class too. We'll work together on a bunch of problems. But if anything's kind of confusing, be sure to note it and bring it up later, and let's discuss and all learn together. So thanks, everybody. Hope you are all having a great day, and I will see you in class. Alrighty.